Hello traders, Gary Wagner here just before 11 o'clock in Honolulu, 5 o'clock in New York on Monday, the 15th day of September, 2014, and this is the daily report for gold and silver. We currently have the precious metals higher except for platinum, but to gold currently trading up about $4 or $5 on the day. 1233.15 current print on the screen. It has had a low of 31.40 and a high of 38.10 on the day. Silver also trading higher on the day. It is up about 6 cents. As you can see, current print 1866. It has had a low of 1831, and a high of 69 on the day. So traders, as you can see, the first day of the week we do have an update, modestly higher, but higher nonetheless. The real question that we need to ascertain, and we'll get some more information on this over the next couple of days, is we've identified an area at roughly 1240.66 on this particular chart, and this represents a 76% retracement. It is a retracement from the most lucrative or the largest of the rallies that we have seen this year, and Lord knows we have not seen too many. We have this $200 rally here. We gave up almost 76% as it came back down. Once it did hit this bottom, this is at about 1240. Then we had a $100 rally, of course. Now, from that $100 rally, we retraced past 61, past 76, all the way down to the 76% retracement, not of this rally, because as you can see, it goes below. We make a lower low. It's the first time we've seen a lower low as we have really entered this compression triangle. So that's another thing that we absolutely want to look at in detail over the next couple of days. But we are trading just above this area right now. As you know, I sent out a special trade alert yesterday as it began to trade in Hong Kong. It was roughly in this area, but my sense was that if it was going to find some support and you had any kind of buying coming into the market, and I am still looking for lower pricing, by the way, but if some buying came into the market, I certainly didn't want to give up the profits that we had received on the short play that we implemented last week. So traders, currently you are short the market and your stop is at or above 1241. Now, 1241 is roughly where I'm currently pegging resistance. Let me try to get this in as much of a parallel line as possible. But as you can see, what that corresponds to is really the low that the market hit as it came back down. This, I believe, is 1240 or 1241. So by moving it just there or just above that area, which is what I suggest, it should protect us so that if we do see this market begin to clip a little bit higher as it moves up, I would expect it to move up and then break solidly below this particular mark, and this mark, of course, is at 1230. Whether we're just had a little bit of short covering coming into the market, because that's what I believe we are seeing. We still have the equities markets now. The S&P was down today. Dow Jones Industrial was up. In terms of the dollar index, that is trading slightly higher to unchanged, up about 4 points. So I don't really call it a really massive move in the market. And in fact, let's go ahead and pull that dollar chart up. What we can see, and this of course is the dollar index, is a little bit of top action right in here, 84.50. That's the high, currently trading up, as I said, about 4 points. 84.35 is what we're looking at right now. Now, as we look at this daily chart, you can see we haven't even been in this territory for quite some time. And to get a real sense of the last time the market's been here, we'll have to compress this chart a little bit. So I've gone ahead and done just that. We've compressed the chart, added a couple of more data points. It's one of the nice things about actually working with 1080. We've got a lot more real estate to deal with. And I draw your attention to this particular top. This is where we are currently trading at, roughly in this area. 84.38. You can see this is a top back in May through June of 2013. Now the market did come down a lot, and at that point hit another top. So then we'll have another, if we do breach this resistance, our next real resistance area is got to be just at around 85 on the dollar index. So with a higher Dow, as I said, that is higher. I believe the S&P was trading a little bit lower this afternoon, but with a higher Dow, we should have gotten, I would have thought, a much more sizable boost in silver. Although trading higher, it is trading nominally higher. I've added simply a horizontal line. We don't have any fib numbers in this area that are going to help us out. So what I'm looking at is particular highs and lows that we've hit in the market. And as you can see, I'm matching that up to this particular low here. We've got one data point here. And that's the kind of wild gyrations that we've seen in silver, where you have less liquidity than gold, you have wilder swings, and to a certain extent you've got a supportive action here. So I'm looking at this as potential support. At this particular point, we're trading right at it, so I'm not going to claim it to be resistance nor support. We need to see it either close above this line or below this line for a little bit more data and information. I recommend that we maintain our short position in gold. We sit sidelined in silver. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow on Tuesday for another daily update and review. Bye-bye.